How do you avoid tax surprises? In a recent video, I walked through some planning opportunities that tie to a specific age. But for this video, let's look at planning opportunities that don't tie to an age. More specifically, let's look at 4 steps I take every new client through so that we can avoid tax surprises. My name is Jack O'Donnell. I'm a financial planner and the owner of JRO Wealth Management, and I help retirees with their income, taxes, and investments. And here are the 4 steps I take every new client through. The first step is, what do I owe? Then we figure out how you're going to pay it, and that gives us a baseline. And we have that baseline, we start doing planning opportunities. Third step is, how can I save money? And then finally, what am I missing? What are the blind spots? And having a plan allows you to do a couple things. One, you can actually spend time doing things you enjoy rather than taxes. And the second, there's a lot to remember when it comes to taxes, and having a plan makes it much easier. I was just helping someone with the Roth conversion, but before we decided to do it, we looked at step number 4. What are we missing? What are the blind spots? And we realized because they're not Medicare yet and they're getting their insurance through the marketplace, they were eligible for the premium tax credit. And that premium tax credit lowered their premiums by more than $21,000 for the year. If we had done the Roth conversion, we would have completely missed out on that opportunity. So that's the power of having a checklist, just to make sure that you're not missing anything and nothing slips through the cracks. So let's look at each of these steps in a little bit more detail. It's tough to do any planning if you don't have a baseline in place. So that's where we're going to start. And all we're doing is saying, hey, this is what I expect my situation to be. And if we make no changes, what should I expect to owe when we're filing your taxes? And here's an example of what that might look like. John is 68 years old and he's filing single. He has roughly $68,000 of income between his Social Security, IRA, and some interest from the bank account. He's in the 12% federal tax bracket, so we should plan for about $2,800 to go to taxes. Now, we'll check back in later in the year just to make sure we're still on track. But now we have a baseline. And after we have the baseline, we figure out, okay, well, how are you going to pay it? And that brings us to step 2. And you have 2 main options with a few important nuances. Withholding, estimated taxes. Now, I've covered this topic in a separate video, but given the choice between these two, I like withholding more. I think it's easier to set up and make changes. And if you need to play catch up later in the year to cover your taxes, it's typically more forgiving than what estimated tax payments would be. Now, a few important nuances. One, don't assume that withholding is automatic. A lot of times you do need to set this up yourself. The second, if you know that withholding is already set up, it might be the default, so it might not be enough. Just last year, I was helping a new client. We were reviewing her previous taxes, and she was wondering why she had to pay so much extra money when she filed. Well, her IRA, the money she was pulling out, only 10% was being withheld for federal taxes. She's in the 24% tax bracket. So that difference, that's why she had to pay another $7,000 when she filed her return. So withholding was set up, but it wasn't enough. And then finally, if you're making estimated tax payments, make sure you save the payment confirmations. It's really easy to do and save you a lot of headaches down the road. Now we have an idea of what you'll roughly owe and how you're going to pay it. And yes, we'll check back in later in the year to make sure you're still on track, but we have a baseline. So let's move to the next step. Well, how can I save money? And the 2 things I like to do are look at your prime tax planning window and your tax breakdown. Now, I've covered these topics in a separate video, but just generally speaking, based on your situation, when is the best time to make moves? And of all the moves available, which ones are the best for you? Here's a few from my checklist. But just remember, the ultimate goal, we're not looking just save taxes this year. We want to be forward-looking and save you taxes throughout your retirement. We want to keep a long-term perspective. But before we do anything, we want to make sure our blind spots are covered. Think back to that previous example, the Roth conversion and the premium tax credit. If we didn't go through the checklist and see what we might be missing, well, we could miss out on a huge opportunity. So that's what the 4th step is. And here's a few examples from my checklist. And one in particular that I want to call out is the widow tax. So you're married, your partner passes. The following year when you file your taxes, you don't get to use married filing jointly tax brackets anymore. You need to use single tax brackets. So what does that mean? Well, if you have $100,000 of taxable income, you would move from the 12% bracket up to the 22% bracket. And that would increase your tax bill by more than $5,000. And those are exactly the kind of surprises that we want to avoid. We want to be ahead on this stuff so that we're not having nasty surprises when we're filing your return. And that's what having a system can do to make sure that nothing slips through the cracks. Taxes change and so can your situation. There's a lot to keep track of. And that's why you have a system in place. And I would check in on this at least once a year just to make sure you're not missing anything. Now, of course, these aren't the only non-age related planning item that you need to take care of. It's just top of mind for most of us because it's a regular occurrence. We file our taxes once a year. But other things include like estate planning. Do your documents reflect your situation? Portfolio management. Do you need to make any changes in order to meet your retirement lifestyle? I'll cover topics like these in a future video, and to make sure you don't miss them, go ahead and subscribe.